Today we're going to talk about SoFi Technologies. We will discuss Cathie Woods' position in SoFi, the overall results of her Ark ETF, and I'll give my opinion on what I'm watching around SoFi that could drive results over the course of the next year. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. SoFi has had a very interesting start to the year. At the end of December, the stock was trading over $10. However, at the very get-go of the year, we saw the stock trade down over 20%. However, from mid-January till now, the stock has traded back up 20% and is sitting at a price around $9. And over the course of the last year, SoFi's stock is up almost 40%. However, if you go back to May of last year, the stock made a massive run up in a very short amount of time. And any investors who have gotten in since June of 2023 have basically traded sideways over the course of the last 8 months. And SoFi is a stock that will continue to see a lot of volatility, especially around the Fed's decision to either raise, hold steady, or even lower interest rates. Because of the business that SoFi is in, they can be very dependent on these interest rate decisions. However, this volatility hasn't scared off super investor Cathie Wood. And if you aren't familiar with Cathie Wood, she's most well known for the Ark Innovation ETF, which from March of 2020 through February of 2021 returned over 300%. Keep in mind, from these highs in February of 2021 till now, this ETF is down almost 70%. However, Cathie Wood is still very connected within the industry and sat down with CEO of SoFi, Anthony Noto, to talk about the company. And they spoke about some of the strengths of SoFi. Specifically, Anthony Noto talked about the market that they are trying to target, which is the mass affluent high earners, and he currently feels that this market's needs are not being met. And SoFi plans to meet the needs of these customers by offering everything from banking to investing to even student loans. And this is a very strategic approach from SoFi. By targeting high earners with large amounts of education, they are looking for people who are going to use a wide variety of SoFi's services, whether it's mortgages or people going to college who need to refinance their student loans. They have a lot of different services that can benefit these people. And in SoFi's most recent earnings, they announced that 90% of their SoFi accounts have direct deposit set up. And this is a very critical thing because once you get people into your ecosystem and using direct deposit, they are more likely to use their other services, whether it's personal loans, car loans, refinancing mortgages, refinancing student loans. These are all going to be big impacts that SoFi can use to kind of upsell their customers. And SoFi is expecting this leveraged approach to start affecting their bottom line numbers over the course of the next year. They're predicting a full year profit of about $100 million. And Ark sees this as a really good opportunity to start building out a position in SoFi and getting more exposure to it. Right now, the position is 32nd out of 37 positions, and it makes up only 0.5% of the total portfolio. And Ark has a rap for really targeting high growth tech companies. We can see that their top 5 positions are currently made up of Coinbase, Tesla, Block, Roku, and CRISPR Therapeutics. The issue with this style of investing is when interest rates are high and money is tight, these companies tend to suffer. And we can see that with Ark Innovation being down almost 70% in the last 3 years. A lot of this driven by the Fed's decisions to increase interest rates. However, you have to keep in mind that the opposite is also true. When interest rates go lower, these tech companies have more money to reinvest into their businesses, and thus stock prices tend to go up. But right now, if you compare Ark to the S&P 500 as well as Berkshire Hathaway, they are severely underperforming. Berkshire Hathaway over the course of the last 5 years is up over 100%, the S&P 500 up 83%, and Ark Innovation ETF is up only 3%. Currently, it doesn't look like interest rates are going to be lowered in the first half of 2024. However, in the back half of 2024, if we start seeing rate cuts or even into early 2025, we could start seeing the Ark fund take off in a major way, as a lot of these companies will benefit from a low interest rate environment. And that is no different for SoFi. They will benefit greatly from lower interest rates. And right now, we can kind of see that analysts are anticipating rate cuts in the back half of the year, because in Q1 and Q2, they're expecting SoFi to only put up 1 cent of EPS. However, their full year estimate is 7 cents of positive EPS, which means in the third and fourth quarter, they're expecting them to put up 5 cents between the 2 quarters. And analysts must have very high expectations that rate cuts will occur by 2025, because we can see that in 2024, they're expecting 7 cents of positive EPS, and by 2025, they're expecting expecting that number to grow by over triple to 25 cents of EPS. And personally, I agree with this. I think that SoFi is going to perform very nicely over the course of the next 2 years. The thing that you have to keep in mind is how much of this is being priced in right now. I don't think 2025 is fully priced in. I think that if we see rate cuts a little earlier than analysts are expecting, this will help SoFi in a massive way, as a lot of people will look to refinance earlier. And this could even have an impact on their 2024 numbers, as they could beat this 7 cents of EPS. And because SoFi is still a growth company, a lot of people focus on their revenue and how quickly that is growing. And in my opinion, the next 2 years, these numbers are very low. They're expecting revenue to grow by only 15.4% in 2024 and 18% in 2025. I think these numbers could easily be 20 to 25% growth over the next 2 years. But don't buy a company just because I talked about it here on YouTube. This is a very small position for me. I think that SoFi is a little bit higher risk than maybe like a JP Morgan, and JP Morgan you get a very nice dividend with as well. However, it is good to have a little bit of exposure to some higher risk companies that offer potential for higher returns. But again, do not buy a company just because I talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.